At precisely 8 a.m. Mountain Time on January 3rd, 2026, something happened in Edmonton that mainstream media refuses to tell you about. A pen touched paper, a signature was written, and with that single stroke, the countdown began for the largest political earthquake in North American history since 1776. Alberta is leaving Canada, not hypothetically, not symbolically. The petition is approved, the signatures are being collected right now, and by October 2026, Canadians will vote on whether to dissolve their own country. The Wall Street Journal won't tell you this is really happening. CBC will frame it as fringe politics. Bloomberg will bury it on page 17 between earnings reports and weather forecasts. They don't want you to understand what's actually unfolding because if you did, you'd realize your investments, your currency, your entire financial reality is about to be fundamentally restructured. I'm going to show you exactly what's happening, who's behind it, and most importantly, how this affects every dollar in your pocket. But here's what I need from you first. If you believe financial truth shouldn't be censored by algorithms protecting the establishment, hit that subscribe button right now. Not later, not after the video, right now. Because the platforms suppress this content, and your subscription is the only way this information reaches people who need it. The system doesn't want you informed. Prove them wrong. Let me take you back to understand how we arrived at this moment. In 1867, when Canada was confederated, the deal was simple. Provinces would contribute to a national project and share in national prosperity. For over a century, this arrangement functioned reasonably well, but something changed. Something corrupted the original vision until it became, quite literally, legalized theft. I watched this transformation happen in real time. I saw what happened when Pierre Trudeau implemented the National Energy Program in 1980, effectively nationalizing Alberta's oil wealth to subsidize Eastern Canada. I saw the collapse of 2008 when Alberta's oil revenues kept the entire country afloat, while Ontario and Quebec received bailouts. I saw 2015 when Justin Trudeau came to power, promising to phase out the oil sands entirely. And now I'm watching the final act. The pattern is always identical. Alberta produces, Ottawa takes, Quebec receives. It's a perfect system of wealth extraction that would make any colonial power proud. The mechanism is called equalization, and here's how it actually works. Ottawa collects taxes from every province. Then it calculates something called fiscal capacity, basically how much money each province could theoretically raise. If you're below the national average, you receive transfers. If you're above, you pay into the system but receive nothing back. Simple enough in theory. Devastating in practice. Alberta hasn't received a single equalization dollar since the 1960s. Not 1 cent. Let me do the math with you right now so you understand the scale of this transfer. From 2007 to 2022, 15 years, Alberta's net contribution to federal finances totaled $244.6 billion. That's $244,600,000. Now, divide that by Alberta's population of approximately 4.5 million people. That's over $54,000 per Albertan sent to Ottawa with zero return. Meanwhile, Quebec received $13.6 billion in equalization payments in 2025-2026 alone. In a single year, Quebec receives roughly what Alberta contributed every 2 years. This is robbery. Systematic, constitutional robbery. But the financial extraction is only half the crime. The other half is deliberate economic sabotage through pipeline blockades. Let me walk you through the destruction. Keystone XL, 1 million barrels per day of capacity, cancelled. Energy East, 1.1 million barrels per day to the Atlantic coast, cancelled. Northern Gateway, 500,000 barrels per day to the Pacific, cancelled. Added up, 2.6 million barrels per day of pipeline capacity destroyed by federal policy. At $60 per barrel, that's $56 billion annually in potential export revenue. Gone. Multiply by the decade since these projects were blocked, and you're looking at over $500 billion in lost economic activity. The Trans Mountain Pipeline finally opened in May 2024. It should have been operational in 2017. It was supposed to cost $5 billion. Final price tag, $53 billion, 10 times over budget, 7 years late. And even now at 890,000 barrels per day capacity, it's not enough. In January 2026, Enbridge had to reject 13% of crude nominations on its mainline because Alberta is producing more oil than Canada can possibly move. This is economic strangulation. And it wasn't accidental, it was policy. Now here's where the story turns, because Alberta found a way out, and the escape route runs straight through Beijing. China has overtaken the United States as the largest buyer of Canadian oil through the Trans Mountain Pipeline. Let me repeat that because it's essential you understand. China, not America. China. Before 2023, Chinese purchases through Trans Mountain averaged 7,000 barrels per day. Today, they're at 207,000 barrels per day. Calculate that increase with me. From 7,000 to 207,000. That's a 2,957% increase. Nearly 3,000% in less than 3 years. From May 2024 to September 2025, Canadian crude exports to the Indo-Pacific region went from essentially zero to an average of $571 million per month. China alone purchased 5.9 billion Canadian dollars in Alberta oil during that period. 75% of heavy crude exports leaving Vancouver now sail west, not south. The pivot already happened. Alberta already has a customer that doesn't require federal approval. Premier Danielle Smith understands this leverage. On May 15, 2025, she signed Bill 54 into law. This legislation reduced the signature threshold for citizen initiative petitions from 20% to 10% of votes cast in the previous election. It extended the collection period from 90 to 120 days. It made separation referendums not just possible, but practically inevitable. On December 22, 2025, Elections Alberta approved the referendum question. Word for word, here's what Albertans will vote on. Do you agree that the province of Alberta should cease to be a part of Canada to become an independent state? Yes or no. Binary. Irreversible. The signature collection runs until May 2, 2026. They need 132 signatures. Based on current polling showing 36% of Albertans supporting separation, they'll get them easily. The referendum will happen in October 2026. This is not speculation. This is scheduled. This is happening. And here's what the mainstream media absolutely refuses to discuss. The Trump administration is actively courting an independent Alberta. A delegation of Alberta separatists, led by Calgary lawyer Jeffrey Rath, has met twice with Trump administration officials in Washington. According to Dennis Modry, a member of that delegation, on April 22nd, U.S. officials offered a $500 million transition loan to Alberta should it choose to leave Canada. $500 million to ease the exit. The United States government is functionally offering to finance Canadian dissolution. Why would Washington want this? The math is obvious. Alberta produces 5 million barrels of oil daily. That's 84% of Canada's total output. An independent Alberta aligned with the United States would give Washington direct access to the third largest oil reserves on Earth without having to negotiate with Ottawa. It would eliminate Chinese competition for those resources. It would secure American energy independence for generations. From Trump's perspective, Alberta joining the American economic sphere is infinitely more valuable than annexing Canada whole. Premier Smith has been careful. She says publicly that she wants Alberta to remain within Canada, that she supports a strong and sovereign Alberta within a united country. But her actions tell a different story. She's appeared on Fox News repeatedly, building an American audience. She's advocated for bilateral trade deals that would bypass Ottawa. She's refused to condemn the separation movement while making it legally easier. And critically, she negotiated a memorandum of understanding with Prime Minister Carney in November 2025, promising a new 1 million barrel per day pipeline to the coast. This pipeline agreement deserves scrutiny. The application is supposed to be submitted by July 1, 2026. But no company has committed to actually building it. Enbridge, Trans Mountain Corporation, South Bow. They're all on the advisory committee, but none have signed construction contracts. This smells like a delay tactic. Carney offering something that won't materialize to buy time past the referendum. Smith accepting the offer while knowing it's vapor. Both sides playing games while the countdown continues. Let me show you what happens next. If the referendum passes in October 2026, and I believe it will, Canada enters constitutional crisis. The Clarity Act of 2000 says the House of Commons gets to decide if the vote represented a clear majority. But Alberta won't wait for Ottawa's permission. They'll move unilaterally just like they've moved on everything else. What does that trigger? Let me walk you through the timeline. Days 1 through 7 after a yes vote, the Canadian dollar experiences immediate volatility, potentially dropping 5 to 10% against the USD. The Toronto Stock Exchange suspends trading in energy equities pending clarity. Prime Minister Carney convenes emergency parliamentary sessions. International markets begin pricing in Canadian dissolution. Days 7 through 30. Credit rating agencies downgrade Canadian sovereign debt. Capital flight accelerates as institutional investors move assets to the United States. Legal challenges are filed, but Alberta ignores them. Negotiations begin simultaneously with Ottawa, Washington, and Beijing. Alberta announces it will continue honoring commercial contracts while transitioning governmental authority. Days 30 through 90. Canadian banks report losses on Alberta-based loans. Pipeline companies announce contract renegotiations. China offers a direct bilateral trade agreement with Alberta. Trump announces preferential tariff treatment for an independent Alberta. The Canadian dollar loses an additional 10 to 15%. Bank of Canada interventions fail to stabilize the currency. Beyond 90 days, Alberta establishes a provisional central bank. The Alberta dollar, backed by gold, oil reserves, and potentially Bitcoin, enters circulation. Trans Mountain contracts are rewritten with Alberta as the sovereign counterparty. Canada without Alberta becomes a service economy without industrial base, surviving on tourism and real estate speculation until those bubbles also collapse. Why am I telling you this? Because every word I've said affects your financial future directly. If you're a Canadian holding savings in CAT, those savings lose purchasing power proportional to Alberta's departure. If you hold Canadian energy ETFs like XEG or iShares Canadian Energy, you own paper claims on companies that will face years of regulatory uncertainty, renegotiated contracts, and asset restructuring. If you have exposure to Canadian banks, you're exposed to their loan portfolios in Alberta, loans that become foreign debt overnight. Let me make this personal with a specific number. Imagine you have $10,000 in a Canadian balanced fund with typical exposure to energy and financials. In the 12 months following Alberta separation, that fund could easily lose 25 to 40% of its value through currency depreciation alone, not even counting equity losses. Your $10,000 becomes $6,000, maybe less. And that's the optimistic scenario. Now think about what happened to ordinary people in previous currency crises. In the Weimar Republic, middle-class Germans watched their life savings become worthless in months. In Venezuela, bank accounts that could buy houses couldn't buy groceries within years. In Argentina, dollar-denominated debts destroyed families overnight. History doesn't repeat, but it rhymes. The rhyme scheme is clear. So, what can you actually do? Step 1. Reduce your exposure to purely Canadian-denominated assets. This doesn't mean panic selling, it means strategic rebalancing. If you're over-concentrated in Canadian equities and bonds, diversify internationally. American energy producers, Australian resource companies, Swiss financial instruments. Anything not dependent on Canadian political stability. Step 2. Consider precious metals as a hedge against currency devaluation. Physical gold and silver in your own possession. Not ETFs, not mining stocks. Physical metal that doesn't depend on any government stability. Step 3. Monitor the signature count for the Alberta referendum. The Alberta Prosperity Project needs 132 signatures by May 2nd. Follow their progress. When they hit that number, and they will, accelerate your protective measures. Step 4. If you work in industries dependent on Canada-US trade, start building skills and connections that would transfer to other markets. Supply chains will restructure, jobs will relocate. Don't be caught without options. Step 5. Subscribe to this channel and turn on notifications. This story will develop rapidly over the next 18 months. Mainstream media will continue ignoring or minimizing it until it's too late to act. I'll keep you informed with the analysis you need to make decisions ahead of the crowd. Here's what you must not do. Don't assume this is political theater that will blow over. The signatures are being collected right now. Don't assume Ottawa will successfully block separation. They have no mechanism to force Alberta to stay. Don't assume the markets have priced this in. They haven't. Financial models are built on continuity assumptions that no longer apply. Don't wait for mainstream validation before acting. By the time CNBC covers this seriously, the opportunity for protective action will have passed. The train is leaving the station. Alberta has decided that $244 billion in tribute, 3 blocked pipelines, and a decade of economic warfare are enough. China is buying. Trump is courting. The referendum is scheduled. This isn't a drill. There are 2 types of people watching this video: those who understand what's happening and position themselves accordingly, and those who learn about geopolitical earthquakes from the damage reports afterward. The numbers are public. The timeline is set. The question is only whether you act on information or react to consequences. October 2026. Circle it. The Canada you know ends in 10 months. What you do in the next 90 days determines whether you're protected or exposed when it happens. Knowledge without action is just entertainment. Make it count.